combined capital index, for starters, was up by 0.1% over the month, which is quite a reduction in growth that we've seen over the past 9 months. I mean, in this phase where the market's been re-accelerating since the most recent cash rate cuts back in May and August, a rebound in investment activity. So to see a 0.01% growth rate on a month-to-month basis was quite different. Normally we'd be seeing values rising between, say, 1 and 2%. So what's really drawn that overall growth figure down is a reduction in growth rates in Sydney, particularly. So Sydney's growth rate over the month was negative 0.4%, so essentially flat. Melbourne reduced down to 0.5%. Most of the other capital cities continued on their same sort of trend. So Perth continued to track backwards. Brisbane and Adelaide showed some modest growth. Canberra, a little bit volatile, did show a decline, but the broader trend in Canberra is one of generally positive trends. Hobart really stands out as being one of the best markets at the moment. It's showing continued growth, third best performing capital city over the past 12 months. Values are up by nearly 14%. So still very diverse, still very dynamic, but it does look like the two hottest markets, Sydney and Melbourne, where value growth has been quite phenomenal the last 5 years. Maybe we're starting to see signs that those markets are slowing down. It probably is a bit too early to call the peak, but I think without a doubt we're seeing a hint that the market is slowing. Month-to-month data can move around a little bit, so we'd like to see a few more months of softer data to see what the trend is. The trend is always more important than the month-to-month movements. And of course, April as well does have some seasonal factors to it. You've got Easter in the middle, you've got school holidays, long weekend for Anzac Day and so forth. So I think when we see the May data and the June data, particularly see what's happening with mortgages and mortgage demand as well, has investment started to decline, I think that'll be the key signs that the market's starting to move through the peak. But without a doubt, if it's not moving through the peak now, it's probably just around the corner considering the maturity of the growth phase, nearly 5 years into it, and just the magnitude of the growth we've seen in markets like Sydney and Melbourne. I think sentiment's probably starting to turn already. You know, you look at the formal measure that Westpac puts out, the Consumer Sentiment Survey, and the time to buy a dwelling index is looking pretty unhealthy. It hasn't been this low for more than a decade. Anecdotally, we're also seeing consumers probably behaving a little bit more cautious in the marketplace. I think vendors are probably becoming a bit more cautious as well. You know, we saw a bit of a rebound in auction clearance rates over the final week of April. I'm just wondering if potentially that's more vendors willing to accept a slightly lower offer than maybe they would have accepted a few weeks ago, simply to offload at a time when there's a bit of uncertainty around whether the marketplace is starting to soften.